Hey, welcome to the closing beat, everybody. Happy Wednesday. How you doing out there? I just was trying to leave for a couple days. You know what I mean? I had this cute little cabin, looked like a tiny house, kind of a cabin in the mountains, but it was on the river, and like the stream was going. It was peaceful. I sat out there at night. We had a little fire going and everything, and then the banks fail. And I'm like, why do I have so many emails? You know, you get a signal here and there out in the mountains. I'm like, whoa, what is going on? Y'all have been up to a little bit of mess out there. I leave you for a few days and you ruin everything. But for the rest of you, welcome. If you're watching for the first time, we're financial advisors here at Jazz Wealth, and we like to talk about the stock market. I feel like the only advisors that actually participate. I'm going to talk about that a little bit more here today with some of our position changes. But this is our background. We manage funds. This is my background, managing funds for a living, and so we bring that to the company here at Jazz Wealth. Being the owner, I thought, hey, I can maybe sneak away for a little bit, but y'all just, you just kind of ruined it. I'm like, okay, so what do I do? Just like never leave the tiny house and just stay here? Anyways, we'll talk about it here today. Obviously, financials are the focus, continue to be the focus. Very interesting. Very, very interesting what's happened. And remember, I haven't been here since the start of Silicon Valley Bank. That was news to me when it happened. We actually owned it like 2 years ago, so kind of cutting it close there. But naturally, that's the big focus right now. That's what everybody's talking about. And then from here, the Fed is the next thing that comes up there. Leave for a few days, man. So I want to bring you maybe clients up to speed real quick. Remember, we have about 32% of cash in our portfolios. We are putting some of that cash to work. This is our aggressive stock fund portfolio. In the blue is us, and down here is a stock market. Since we've had that cash, we've been nice and quiet. We haven't been wiggling around as much as with the market. All that's about to change because we have selectively started adding to our financials positions. How can you not, right? If you're out there and you're looking for something to do, I'll just look at like the financials, the large financials here falling off a cliff. KREs, the regional financials, obviously falling off a cliff and maybe in a little bit more trouble. What we did, just kind of went through all the banks and said, okay, let's assume that a lot of this continues. Who's going to be in trouble? Who might feel a little more pressure, and who's going to be just fine? So we today started selectively adding to our financials. I just think you have to there. Tomorrow, so we went from 32% cash to 26% cash, and starting tomorrow, well, not starting tomorrow, but tomorrow in our Wine and Wealth class, the class we do for clients every Thursday, that will go into more specifics. We'll talk about what we did, how we adjusted, what we like, what we don't like. So for those of you that are clients that also like to trade and invest in things, you'll be able to do the same as well. We got the Fed meeting in about 6 days, well, actually in 6 days. Inflation came in yesterday a touch higher there, 0.5% month over month versus 0.4% month over month expected. We're basically sitting at 6%. Where's my chart here? Here's where we're at. So we're sitting at 6.04% there. Now, on this path, by the way, this is something you don't hear a lot about. On this current trajectory, if we don't have any more than 0.2% month over month increase in inflation, we'll actually be down under 3% by June this year. Doesn't sound like we would, but at this pace, I'm not saying the pace continues, but we'd be at that pace. And without SVB as our problem there, we were looking at a half-point rate hike. Remember, you go back just 2 weeks and the Fed was already putting the minions out there. Some of the presidents, they were saying, well, a half point's not such a big deal. Maybe we go a half. Maybe a quarter's not enough. All those words that we kept talking about, they were trying to do that. But with the banks failing, that unfortunately makes for only a 20% chance. Oh, it makes for a 20% chance that there'll be no rate hike at all. I don't think that happens. I think most people are looking at least a quarter point here for the rate hike. We'll see what happens. I'll tell you, if there's no rate hike at all, then the Fed is essentially signaling that they recognize there's problems out there. It's a very delicate kind of a spot that I wouldn't want to be in a position to solve for there. The thought for why there'd be no rate hike, of course, is because people believe the Fed's already pushed it too far. They're causing a little bit of the economy to break here and maybe not such a soft landing kind of a way. And so that could be what they do. So now we're talking about a quarter point hike or no hike at all. That's basically what we're looking at. In the next 6 days, we will know. We will definitely know, actually. If you are a client, then I sent an email out. I literally was sitting outside in the mountains at 11:30 at night, and I'm like, this drama over SVB is so ridiculous. They didn't fail because there's a problem with the economy. Just so you know that. I literally went step by step in an email and said, here's everything, their financials and everything. Here's how this went down and why this is not a problem for everybody else. And you say, oh yeah, but Credit Suisse and the others. Credit Suisse, they have problems. They're already in trouble. They've been in trouble for 2 years now. It's just now that's making a headline because it fits. It fits what we're talking about on TV. So be very careful about the headline drama kind of news that you read. Look at the details. And if you're one of our clients, just read through that email. I even put on there, it's a 4-minute read, and you'll know everything you need to know about SVB Bank. All the geekiness summed up into really general discussion there so that you know what happened there, because it was killing me seeing these people talk about contagion in financials. It's 2008 all over again. No, it's not. It's definitely not. And I have a feeling that that's it's done to draw attention. You watch TV, you go, oh my gosh, am I in trouble now? Should I be moving money? No, I cleared it all up for you so you can better understand that. All right, a little bit of a ramble there. Let's get going here. We got the S&P clearly wanting to find that this is support. Remember, prior resistance becomes the next support. That's what technical traders like to look at. And when you look right here, it wants to use that. The market wants to and is finding buyers at this spot every single day. Despite how bad we start the day, despite how bad or good we finish the day, you can see clear as day people are trying to use this as a buying point, which is optimistic for me because it lets me believe that you're not falling for this. This is all retail selling. Now, I'll tell you, this is not the best of news for the financial sector as a whole, because remember, before I left, we talked about what was going to happen this Friday. I actually did a Jazz After Dark video on that one, how your mutual funds, your ETFs, the S&P sectors, and your retirement accounts are changing this Friday, and it's not clickbait. I'm not messing around with you. I don't do that often, but when I do, I really go for it, right? So remember the change that's happening in the industries and the sectors in the S&P. So that means that you have this additional selling from panic and fear, and most of it is that. But you also have this adjustment period where people are saying, oh, that's no longer a tech stock. That's now a financial stock. I need to make way by selling some of our financials and pushing these new stocks into the financial sector. Your PayPal, your Visa, MasterCard, those aren't tech stocks anymore. Those are now financials, right? So it's not the best of timing here for that, but there's no delay on that. They are doing that. That's what's going to happen. So anyways, you got the S&P down. It was worse, but again, people wanting to use this area as support. You got the Dow, the big headline number there. Of course, that looks a lot weaker. But the NASDAQ, whoa, look at the NASDAQ. It's just like not participating. Oh, it's because they don't have as many banks. No, it's because Microsoft helped lift the NASDAQ today, take it from negative to positive. Alphabet, I'll use this one here, to take us from a negative to a positive in the NASDAQ. Meta, oh, we're laying off more people. That's good stuff. That'll make the stock go higher. Bad news for the economy, good news for the stock. Amazon there as well. And some of the semiconductors. AMD was one. These are all more... these are the stronger of the group at the moment. Just point that out. AMD, even Intel a little bit. And so that's enough to get the NASDAQ to move back towards, relative highs. Bond market, I want to point that out real quick. Whoa. You realize if you've been having fun with treasuries out there and you say, oh man, I got a little extra savings, I don't have anything to do with it, I'm gonna go here into treasuries. You realize this is the wildest ride that you could be on. For example, let's look at, it's an ETF. I'll use this, I use the ETFs not as a recommendation, but so if you're following at home or something, you can go watch too. That's why I do this. So you don't have to have some fancy futures symbol or something. I want to make it simple. So here's your short-term treasuries. If you believe in short-term treasuries, maybe this is an ETF that you've looked at in the past. You see this move? What's going on there? You got a 1-year range now of over 5%. Well, a 5% range for the entire year in Apple would be unheard of. Right? It would be an incredibly quiet year for Apple. A 5% range on a stock like Eli Lilly or maybe like Nextera Energy, whatever, a stock, it'd be pretty unusual. But for short-term treasuries, a 5% move, a range from high to low of 5% there, that is absurd. That is as large as it gets. We've never seen something as large as that before. You had a daily move. What was it, yesterday? Let's go over here. Nope. Let's go over here. Yes. So here's the SHY every daily move in its history, meaning each and every day, what was the percentage gain? And now let's just plot that. So it looks like a hot mess on the charts here. Has it ever, now it was 0.99%, so it wasn't quite 1. Has it ever moved 1% in one day, plus or minus? Doesn't matter. Nope. The furthest on the downside, 2009, lost 0.66%, and this is actually supposed to be 0.99%. Never has it moved that much. And in short, what I'm saying is you have so much volatility in the very vehicle that you just said, let me take my cash, my savings, my safety money, and I'm going to go to bonds and treasuries and short-term notes. That's what I'm supposed to do, right? I now have a reasonable rate for doing that. And you're getting whipsawed all over the place. Very difficult place to invest. So, all of that to say, you still have a market where do you go? What do you do? That's incredible. If you're looking at that, looking at the market right now, I just find it like incredible that people are moving money that fast for fear of a headline that you saw on TV. Not the facts, but a headline. That's fascinating. It lets you really see how pot stocks were so big. 3D printing stocks, what was the thing? The meat that's not meat but tastes like meat. Remember that thing? Fascinating. We all go chase a Bitcoin. We all go running over here and then, oh, AI. And we run over here and because of a headline. Guys, there's an old saying that you will go into a grocery store and you will spend 5 minutes squishing and sniffing and tossing a cantaloupe to make sure that that $3, maybe now $5 cantaloupe is the best one out of the group, because you don't want to be caught going home with a squishy cantaloupe. But yet when it comes to a stock or making a decision on your money, click, done. I don't know what happened. I just did it. Right? Think about it a little bit. It's just incredible out there. Now, again, March 17th, that's this Friday. There'll be that change. Go back in the Jazz After Dark videos. You can see the details if you like. I outlined it really nicely, so it was real simple to kind of understand and see what's going on. Wine and Wealth tomorrow will be the specific changes to our portfolios, the financials we added to, why, how did we come to those decisions, and then I'll go through a list of others that are sort of not deemed to be safe, but are in less stressful type positions. So you can kind of analyze. And we'll talk about the bad ones too, in case you happen to be in them. So we'll get into more detail for all you stock market geeks out there. Hey, stocks in the news today. Meta. This is just what I said yesterday. Zuckerberg puts out a letter and says, leaner and meaner, essentially. Summarize the whole thing. You don't have to read it. He says, leaner and meaner is what we're doing this year. Because Wall Street's making them do that. Remember, they were going to spend literally tens of billions of dollars on something nobody seems to care about. Remember that? That was one of them too. Well, metaverse. Oh, how do I invest in the metaverse? Oh, I got to get some NVIDIA because of the metaverse. How'd that pan out? So Meta now says, Wall Street doesn't want us to focus as hard on the metaverse. And we're like, yeah, finally, you heard it. Okay. So the stock goes up. So Mark Zuckerberg not getting his way there. It's okay. He'll come back to it. Credit Suisse in the news. This actually started in the European markets last night. If you follow European markets, I was in transit, but otherwise normally I do. European markets open and then the whole way. I mean, they fell apart over there. That's what helped start our markets a little bit lower here today because they're not getting the funding that they're used to getting, and they shouldn't, right? That's really, you guys don't like Wells Fargo. You see what they do. You may not really like Credit Suisse. Nonetheless, it did recover a little bit. There's your meme stock type buyers, the people that say, oh, it's going to be fine. Also, they did find out that they're going to get some money there. So that did help support the stock through the day. I'll be honest with you. We own it in our portfolios here. Just one. But we own 0.01% of it. I literally left it there. It was about 2 Novembers ago, that we were selling out of things little by little. And I literally left it there. I remember this day vividly. I left it, that and two other stocks. I left it there because I couldn't get the portfolio to round up to 100. And I was like, I don't want to add more here. I can't add more here. I don't want to take away from here. So let's leave Credit Suisse. 0.01%. A little bit of luck there, right? Because I don't really care for them and how they've been running their business anyways, but a little bit of luck there. Nonetheless, it's cost our portfolio like a whole $1.50. So I'm not too worried about that. But I'm just being honest, right? Like you said, oh my gosh, Dustin, are we getting hurt? Yeah, well, 0.01% of it. Guess. So a little bit of under the surface, you still have earnings season. So, that's still happening, but it's mostly retail stocks and it's basically over. Guess comes out with earnings there, lowered their guidance. That started with your gap down here this morning. Got a couple of upgrades not to buy, but it got a couple upgrades in the mix there saying that this was more of a kitchen sink type earnings. I did not get to go through it. Coty completely changing their mind here. These guys make makeup. They're killing it. They sell the devil out of makeup and still doing so. Before that last earnings, over 2 earnings ago, they said it's not going well. We're not able to pump this stuff out with the brand name, the Kardashians and all that stuff, and charge those high dollars. They're changing their forecasts a little bit there. They raised their guidance going forward. Yes, we are now selling stuff. People still want to buy the high-end makeups that are exactly the same as the other makeup, but they're buying it there. And they said our earnings and everything won't change. We're going to keep it just like that. That's actually good news. I mean, the stock was down, maybe with the market or whatever, but that's good news compared to where they came from if you happen to be following along with this. And Lennar, pretty optimistic about the home building market there. They are, not me. I didn't say that, but better than expected earnings. Sales still strong there. Backlog still strong. I don't know. If you were to look at the impact of the Fed raising rates and say that's going to hurt the home building market, it hadn't done it yet. It has not done it there just yet. Anyways, I'm back now, and I don't really have any other news interesting for you. I spent a lot of time on the SVB email, updating everybody on that. Getting ready for the class tomorrow. I saw things fall apart. I was like, we're putting money to work. Literally told everybody, stop, no orders. We're going to get our portfolios adjusted here. I love it. The panic I'm not saying you, but the panic that's out there, what are you doing? And thankfully, I had one client that actually said they wanted to buy something, and I won't say what it was or who it was, but they said, I want to take my portfolio and I want it to go into this. And I said, no, we don't do that. I can't let you do that. And they were like, no, it's okay. I want it to go into this. And I said, I'm not going to do it. You're going to have to come do it here or something. And so I said, you're going to have to go. Sadly, I don't want that, but we're not going to let you do those sort of weird things. So don't let me lead you down the path of you thinking, oh, Dustin's going all in financials. No. We went from 32% to 26% cash, and we very selectively bought financials. I will never just decide to go nuts and do something. Now, personally, I like little lottery ticket plays here and there, but I would never, ever do that. Fund managers cannot do that. And actually, mutual funds themselves can't do that legally. They have to keep their position sizes of a certain size, and we sort of follow the same rules, even though we're not obligated to do that. Okay, so a little different screen here for me. Let me see if I can get the questions. And I'm happy to try to take your questions if you'd like. Are we getting some new names in the S&P 500? Love to see the data on what happens when the companies join the index. We are getting a new name. It's not new news. I talked about this before I left. Fair Isaac, or FICO, your FICO score, that's those people. They're replacing Lumen. And I think that happens, it's not this week, it's going to be next week. But that's it. There's no other new names coming in. If it's because of what I said a minute ago. No, they're shifting the category that stocks go into. So the example I gave, Visa is no longer a tech company. They're a financial processing company, which they always were. And so they're going to be going into the financials. Yeah. Eloy with the 3M. Still with the 3M. Well, you did get those lows while I was gone. Yeah, I mean, that's fine. But so $100, the psychological number so far holding up there. But I don't know what turns it around for you. What's the catalyst? What causes people to go, hey, I was over here trying to pick the bottom of bank stocks, but that 3M looks good. I think I'll do that. What is that other than broad market index support? So I wouldn't say it's burning money. I'm not able to grasp what's going to cause that to be a worthwhile short-term or mid-term investment. The media does sell fear. They do good at it too. That's part of the frustrating part. T-Blow selling cover calls on SPY daily. Okay. All right. So we got a spread going on there. It's absolute money lately. Yeah, call sellers. So this is not my data, but one of the things Goldman Sachs does is they track the performance of premium sellers, premium buyers, and neutral sellers. And right now, compared to the market, they always compare it to the market, but any premium sellers, you're outperforming if you just count the premium that you're bringing in there. Yeah. Yep. Panic you don't get. T-Blow's got 1,000 in BP there. What is a smart amount to risk per trade? Oh, I can't tell you that. So I can tell you that it's fixed on every trade. If you're going to set a dollar amount, I did a class for this actually for clients, right? I think I gave you the whole spreadsheet. You actually first figure out your risk. I'm willing to risk $200 on this trade. It has a 10-cent window that I'm willing to let it wiggle around before I get this wrong, right? So therefore, I can buy 200 shares. That's how you want to do it. And it has to stay the same for if you want to know if you're successful or not. You want to keep the same risk amount. So you want to focus on that. I can't tell you how much to risk, right? Because I don't know. Is this a $25,000 account? Is it a $2 million account and you're being a little bit stingy? I don't know. Think about oil stocks. They're having a hard time, right? So oil down $3 today. It did break the low. There you go. I'll keep my comment there that what do you have that says oil is worth less? There's not much out there that says oil is worth less. You can have the day-to-day drama, sure. The volatility, you're going to get that in oil for sure. But why is it worth less? I just don't buy that there. Yep. You're going to refill the reserves at 70, at 60. Oh, so we're going? So that's it? Refill the reserves there? I didn't catch that comment. I was ever so slightly busy today. You like that STLD? Cool. Yeah, well, that's an economic play right there, right? So the fear of the Fed overdoing it here. So almost back to the 200. You'd want, oh, sorry. Can you see it? Yeah. So you'd almost want to believe at this point, why would anybody buy it until it gets into the mid-90s? Maybe. I don't know. Just saying. Love the extended counter trend plays, though. That is certainly stuff that gets me up in the morning. Holy cow. Sorry. There's a billion questions. I'm going to jump ahead here. Schwab is in good shape. Lots of AUM. Think it's going to pull back or raise with the... Oh, you might want to ask Eric on that one. While I was gone, Eric was like, I can trade. I'm doing this. I believe he has some Schwab. I don't know if he wanted me to tell you that or not. That was his of the banks that he bought, that was his winner today. So, or is the winner at the moment. Schwab is going to be fine. I don't know why this is, it's crazy. I'm just not buying some of the panic out there. You open one side, doesn't take extra collateral for me. Seems like a win-win. There you go. Yeah, why not? Got yourself, if you're even better on portfolio margin. So if you're saying I'll play both sides because I have the volatility, because I have the wide range, can't argue with you there, T-Blow. You got the right idea. How long do you think the wide swings in the regionals will go on? What stabilizes the regionals? Yeah, I don't know. I thought they went a good distance yesterday, talking about how they were going to backstop SVB, which is not technically a backstop, but it was good enough for the moment to get people to relax just a little bit. But other than that, I don't know. I don't know what sort of slows the volatility. I think traders welcome it in the meantime, and they're going to cause some of that. So just beware that if you wonder why, like, oh, hey, nothing happened today, but the banks were still wild. Those are your traders. And remember what's happening in the options market. The financial sector is one of the biggest options markets of all the other sectors. So what's happening now is people positioning. One quick move, one way or the other, is going to cause position adjustments for the other side. So you could easily have financials have a down move say tomorrow or whatever, that accelerates and you go, what's happening? There's no news, there's no nothing. And it's purely just people that got a little carried away there with their positions and now are required to sell out. Yeah. I find it difficult to assume tech is going to continue to outperform, I would say. Do you expect Chinese stocks to rebound from here? Or are they headed for new lows? That's unfortunate. So in China, their economy is slowly opening and everything. Turns out they're not spending as much. It's on retail, yes, but broad economy, it's like, oh, they're not spending as much. They're having a slower rebound towards what we'd consider more a normal spending rate. I don't think it heads to new lows over there myself, but I just don't see that economy not getting stronger. Problem isn't bank runs, it's how the banks are run. Well, in SVB's case, yeah. And it wasn't that they did it badly. That was what I put in the email there. It's not that there were, aside from them giving themselves bonuses, that right there before they announced, okay, that should be investigated. But their day-to-day business, actually very conservative. I highlighted that, showed you their actual loan-to-debt balance there. Their day-to-day business was more than fine. There are other banks that are way worse than they are, and they're in no trouble. However, like we always say here with investing, like you got to be diverse. So their own success dealing with the tech startup VC people was what caused them problems, period. Not diverse enough. And I don't know why they didn't go to the FHLB, but I must have been like a timing issue there. But they have additional backstops that they chose not to use, and maybe we'll find out why. I don't know. I don't know. Any Enphase news? It seems to be kind of volatile lately, but maybe that's just normal. A lot of shifting of money over there. Remember, they're going to make a ton of money, and they're working on open. I think the pause is probably until that Ohio plant gets open, unless it was opened while I was gone, like everything else just changed. I don't think so. But a lot of built-up excitement around that, because that's when they can really start collecting their 17 cents a watt and all that stuff. Or 7 cents or whatever it was. Yeah. Yep. Hey, what's your opinion on the Fed insuring all the amount in the banks, not just the 250? From like SVB Bank. My opinion doesn't really matter there. I mean, we all know it's $250,000. I would argue that just like the Social Security taxation limit number, yeah, we could just raise that. Could we go ahead and raise that? Please raise that. So same concept. 250 is not what 250 was when that was established. So remember, it was 1994 when the Social Security said, if you make, married filing jointly, if you make over $34,000, we'll start taxing your Social Security. 1994. So not many people were paying tax on their Social Security because, well, okay, married filing jointly, but I'm retired. I probably don't have not earned income. I don't have qualified income to get me to be taxed. But they never raised that number. This is a total side topic. So now you got 94, 95, 96, inflation, 7, 8, 9, all the 2000s. It's still the same number today. Okay? You make a few withdrawals out of your IRA and there you go. Now your Social Security's taxed. So side topic. All right. This went well. So I'm going to wrap it up here for the day today and get caught up. We'll be back tomorrow, of course. We'll be doing Jazz After Dark. We'll be doing the Wine and Wealth. We'll be doing this class here tomorrow. So back to work. All is good, and we'll see how the markets perform. We'll be on it. You guys enjoy the rest of your day. Thanks for watching and subscribing and all that good stuff that we're supposed to ask you to do, and you do. Right?